Okay, I think we are going to get started now that we have had a bunch of people join. Um, Thank you for coming to our webinar, everyone. It's great to see so many people here. Welcome to the Energy Sage Smart Financing Solutions panel. I'm Alex Langoni. I'm one of our senior researchers here, and I'm going to introduce our guest panelists and our internal Energy Sage advisors. And I'll give a little rundown of what we're going to talk about today, and then we will dive right in. Um, so the first thing that we're going to talk about are solar costs and things like incentives and rebates. And we have our three lender and banking experts with us today. Shannon Rudd from Atmos Financial, Dima Headley from Climate First Bank, and Doug Pierce from Sungage Financial. And from Energy Sage, we have Jessica Rayberg and Sam Kuharian, who are our Energy Sage advisors. And so, yeah, we will go through sort of the basic costs of things so you guys can understand. We'll talk about our financing options, and then we're going to leave a big chunk of time at the end so everyone can answer questions. You can ask them live in the chat and we'll pull them out. And if you miss anything, don't worry, we're recording this and we will send it to you afterwards so you can refer back to it. So yeah, without further ado, I will let Jessica and Sam kick it off.
Awesome. Thank you, Alex. Hey, everyone, great to be here. Yeah, just going to cover a little bit about what are the costs of solar, what kind of goes into that. So yeah, obviously these are just an outline of the basic factors that can affect your solar costs and what you'd be financing. So where you live, of course, as things can be regionally priced, size of your house, and that ties into how much electricity you use, how many panels are you looking at installing, depending on where you're living, are you including batteries or not, that sort of stuff. As well as the type of equipment you may be selecting. Again, it could be based on where you're located, the different environmental factors, if there's high heat or not. And also that, ties back into how much you're paying for electricity. The cents per kilowatt hour can vary pretty widely across the country. Next slide, please. Awesome. Yeah, so just some information about, basic costs again of kind of on average what solar costs across the country. For most US solar shoppers, we're looking at about an 11 kilowatt system. And that'll cover, it's a pretty average size covering 100% of your electricity use. So on average, we're seeing that to be about $31,460, before the federal tax credits. There are a lot of incentives out there, and the federal tax one is probably the biggest, most well-known because it applies to everyone, obviously being federal. So that, also factors in addition to those local incentives here. The something to consider about the rates as well, the electricity rate is kilowatt hours. So that's the rate that you're buying the electricity from. Again, that can vary very significantly. Depending on like some parts of California, we can see almost 50 cents per kilowatt hour to, other states where you might see as low as 16 to 20 cents per kilowatt hour. So majorly changing, the cost of solar and, how much solar you need and the financials of that. The average that we're seeing though is about, 17 cents per kilowatt hour on the whole. So the bottom line, long term though, is that because of those ongoing electricity bills you'll have, solar will always be cheaper in the long run or in the short run, because you're not paying those electricity bills, which is always cheaper than paying them. So that is, bottom line, the big, financial incentive of solar here. Yeah, so just to bring it back to some of those incentives we mentioned, again, the biggest one is that federal 30% tax credit. So important to note, it's a tax credit, so it's not a rebate or an upfront payment. It's 30% of whatever the total cost of going solar is. You get to use that against whatever you owe in federal taxes. So when you go to file, you can use it against that or get back up to what you paid in taxes throughout the year. The great thing about that as well is you don't have to claim it all at once. Whatever you don't use, you can roll over to the next year. In addition to that, there are local incentives like on the state level and even through utilities sometimes. A lot of those are based on production. So based on how much electricity you're sending back to the grid that you're not using, you can get compensated as well for that too. There are also some upfront rebates, that take money off the top. Again, a lot of that just depends on what state you're living in, what utility you're using. So definitely check in as you're considering going through the solar process. Awesome. And I'll pass it off to my colleague, Jessica, talk about some financing options.
Thank you, Sam. Hey, everyone. Yeah, so there's two main ways to pay for solar, of course, right? Cash purchase and financing. So let's talk about those two main ways to do this. Cash purchase, of course, is the best way to maximize your savings, right? When you finance, you're going to pay some additional interest and some and possibly some fees, which you so your electricity costs will be taken care of basically for the next 25 years or more. If you do finance, you'll kind of lock that cost in and you won't have to pay your utility anymore if you're covering 100% of your needs. If you are cash purchase, you're eligible to receive all of the financial incentives, the ITC, the rebates that are available to homeowners for going solar that are local in your area as well. So federal and local incentives. If you get a loan, you finance, you're going to borrow money from a lender to finance your solar panel system. You agree to pay it back with monthly interest, right? So you'll still own your solar panels with a loan, which does mean that you are eligible for the tax incentive, the federal tax credit. Most solar loans don't require a down payment. So basically it's, zero money down usually, and then just like a monthly payment from there. So solar panel loans are similar to other home improvement loans, but an alternative to a solar specific loan would be a HELOC, home equity line of credit. Interest is tax deductible most of the time in that situation. So two other things that you can do is you can have a lease or a PPA. So if you wanted to do a lease or a power purchase agreement, basically these are third-party ownership situations. So a company would install solar panels on your property and then sell you that electricity that's produced by those panels at a predetermined rate, giving you a little bit of savings from what it is that you typically pay to the utility. A downside of that option is that just like your utility, usually leases and PPAs do have an escalator year over year. You'll see an additional cost just so that they can sort of keep up with that inflation. That does cancel out that savings that accumulates every year as those utility prices rise. Because you don't own the solar panel system, in these two cases, you're not eligible for the solar incentives and rebates. We typically don't recommend leases and PPAs. I think, the owner of the system does get all of the incentives, so that might as well be you. Yeah, so our recommendation, a cash purchase is best. It offers the most savings. I know that's really hard right now. So if you can't make a full cash purchase, a solar loan is your next best option. Our data does show that the most homeowners pay off their loans in about 7 to 9 years. So usually you'll see homeowners take out a 20 to 25 year long loan, but they're saving a lot of money by doing this, and they're usually paying down that loan in a lot quicker of a time period. So what you'll see is long-term savings on your electricity bills. You will see a potential increase in property value. The Zillow national average is anywhere between 3 and 5%, just sort of depending on where you are, and also depending on what the solar system is able to cover of your usage. And then you have tax incentives and rebates that can be leveraged when you own. So I will go ahead and pass it off to our experts here. Shannon,
Hi,
take it away.
everyone. Thank you so much. So my name is Shannon. I'm the Partner Success Manager at Atmos Financial. We're super excited to be here. So thank you, Energy Sage, for having us. So I'm here to talk about what customers should consider when going solar. So it's important to ask yourself and kind of understand your motivation to go solar to ensure that your project aligns with your goals. So these are some things that customers can consider when going solar. So what are your long-term goals? Do you want to own your system outright? Are you interested in the environmental aspects of going solar? Do you want to pay your system off early? Do you plan on selling your home within a few years of getting your solar system? So these are important factors to consider in the first early stages of assessing your solar journey. And once you have your motivation sorted out, you can kind of start to speak with different solar installers in your area. It's always good to come prepared with some good questions for your installer. So understanding what their licensure looks like, what their certifications are, if they will be using subcontractors, getting a sense of how much experience they have in installing residential solar, and understanding the scope of work and how long the project will take. So that being said, when you're talking to installers, I think something that's really good to consider is having multiple bids to compare before selecting the company that will do your solar installation. So when you're getting these different kind of project bids, it's always a good idea to compare the different total costs of the project, including the equipment and labor, making sure that that's clearly scoped out in your proposal, getting the system specifications, including the system size and the energy output, and then asking your installer, if you're going to go for cash or a financing option, just understanding the difference between the costs of the cash system versus the financed price.
All right. My name is Doug Pierce. I'm our Director of Sales here at Sungage Financial. And I'm going to talk a little bit about some different scenarios from a few customers as they're going out looking for financing. So the first one we'll talk about is Bill. And for Bill, he chose to get a home equity line of credit. I should mention, as someone mentioned earlier, home equity line of credit can have some tax benefits as well. So that's one of the plus sides with that. Generally, it takes some time. So we see an average of about 60 days to secure the line of credit. Just like with a lot of loans, when you're applying, your credit score is impacted short term because there's a hard credit inquiry on your credit report. And at the end of the project, early or generally you need to be making monthly payments before the solar project is complete. So that means you're paying a loan payment and an electric bill prior to getting the benefit of that solar system being up and running and producing electricity. You do get the federal tax credit from this, but with a home equity loan, it's really on the consumer side to make sure that you're applying that savings, if that's your goal, down on the home equity line of credit. And sometimes by having your home equity line tied up, it's hard to do any other home improvement projects that you have, and you may have to put those off into the future. They also generally come with a mortgage lien on the property. And when you sell the house, you have to pay off that home equity line before closing. So it's something that can't travel to the new homeowner. It's something that you as the owner of the home need to take care of before you sell that home. Next, we have Bob. He chose a Sungage loan. His monthly loan payment is reducing his total cost of electricity. Most solar specific loans have some structure that allow you to take the federal income tax credit as a way to get your payment lower. So generally payments can tend to be lower with a solar specific loan. And the first payment is due after the project is complete. So there's generally not a period where you're making a monthly loan payment and an electric bill. And as I mentioned, the 30% federal income tax credit, for a lot of solar loans, particularly with Sungage, you have the ability to hold that off into a 0% interest portion, so your monthly payments are lower. In some states, there's also some state incentives, so you can take the 30% federal incentive and then any local incentives that you have, and you're able to roll those into those deferred periods, which makes your payment even a little bit lower. And there's no interest accrued on those dollars. So it allows you to really take advantage of subsidies today, have time to get those back, and then apply those to your loan to keep your low monthly payment throughout the term of your loan. With Sungage, we do a soft credit check. So throughout the loan process, your FICO score is unchanged when it comes to the application specifically. And you know, we tend to be very proactive to homeowners to remind them to, you know, your federal income tax credit came back in your tax returns, and just as a reminder, you're going to want to apply that to your loan to make sure your payment stays low. This kind of helps you from having a lump sum payment to have to come out of pocket if you wanted to re-amortize your loan down the future. And one of the other advantages is when you move, the new home buyer is able to resume or assume the remaining principal of that loan, and you can transfer that principal to the new homeowner, which gives you some added flexibility there. We can go to the next slide. So a couple important things to know when you're applying for a solar loan is really know your FICO score. I know there's a lot of credit services out there. I know I get monthly updates. It's on my credit card statements as well. Allows you to see what your FICO score is and can give you a sense of whether or not you would be approved. You also want to make sure that not all solar lenders are going to use the same underwriting policies. We all have slightly different versions and different rules that we apply. So it's often that you may get approved in one place and not another. So to Shannon's point earlier of getting multiple quotes, that's a great way to make sure you're able to really shop around and get the best thing for you. It's also important to limit larger purchases prior to applying, particularly things you're going to finance. So I would hold off on buying any furniture for the home until you're done with the solar loan, or really any loan. Also have the ability to add a co-applicant when available, and you can add other sources of income such as rental income, alimony, generally things that you're getting on a monthly basis that are reliable and able to prove. A couple things to ask about is, you know, how is the loan going to accrue interest? Because not all solar loans or home equity loans apply interest in the same way during that deferral period while you're waiting to get your tax credits. Also, can you add other things to your solar project, like batteries, roofing, things like that tend to be very commonly added to solar projects? Also, can you re-amortize? It does happen where folks maybe can't get the entire tax credit in the first year, and maybe you get the second half of that tax credit the following year. And can you apply that second lump sum towards your monthly payment to get that down lower? And again, really do your homework to investigate what happens if you decide to sell your home. I don't think, for us, no one has a crystal ball, and a 20 or 25-year solar loan, a lot can happen in that time. So knowing that if you decide to move, what would happen to your loan is an important consideration when you're going into that purchase and applying for the loan.
Thank you, Doug. Hi, everyone. My name is Dima Headley. I'm the Director of Digital Banking with Climate First Bank, and I run our solar lending program here. Today, I'm going to go over questions that you should ask your loan provider when you're vetting them. So when you're looking to finance any type of financing option, it's really important that you do your due diligence. Think of it as interviewing your bank or the financing company to ensure that they're the right choice for you. Like Doug and Shannon mentioned, there are options out there, and not everyone is the same. They're not cookie cutter choices. You got to find the one that's right for you. Same thing when you're interviewing with installers. So some of the recommended questions that I suggest would be, what are the qualifications or requirements for the loan? Doug mentioned FICO score. There's also debt to income ratio. There's different factors that every loan has, and that's something you want to make sure that you're aware of before you apply for that loan. What are the terms of the loan? So there's different terms out there. They range anywhere from 10 years to 25 years. Also 30-year loan options. You got to find the one that's best suited for you. Is it a fixed rate? They mentioned like the interest doesn't accrue the same. That is accurate. You want to make sure you have a fixed rate so you're not going to have something that's going to escalate. Doug mentioned about home equity lines in one of his slides. Home equity lines of credit tend to have a variable rate. So looking at that option of a fixed rate option to make sure you have that fixed payment is important. Also, is there any prepayment penalties? If you were to pay off that loan, you came up with a bonus, or you came into cash and you wanted to pay off the loan, are there any penalties that's going to be associated with that? The other question I would ask is, do you require the ITC credit to be applied to the loan? Some loan providers require it for your payment to stay fixed. Others don't require it, where you can choose to do it with other options or other things that you want. If you had something that had a higher interest rate, you can apply that towards that high credit card balance or something else. The same thing is, if they don't require the tax credit, will your payments increase? That's an important question to ask. Is your payments going to fluctuate over the years, or is it going to be a fixed amount every month? Will they finance 100% of the project costs? Will they include that roof or that battery, the other items included? And it's important to know that in advance before submitting an application. And then are you able to recalculate or reamortize the monthly payments? I know Doug touched on that a little bit. Some lending options don't require or allow you to do that. So it's important to know if that's your goal in the long term, where you want to apply that tax credit or you want to apply that bonus that you got to reduce your monthly payment. It's important to ask those questions. The other option, the question I have is there going to be a lien on your home? That can impact future options. So if there's a lien on the home, that's something you want to know and be aware of ahead of time. And then what fees are associated with the loan? I know Shannon mentioned that there's fees associated with different types of loans too. Most consumer loans have fees associated with it. Just ensure that they're upfront and transparent about that, so you see that fees and you know what to expect and how to accommodate that. So like Doug shared some scenarios, I'm actually going to introduce you to Sally. Sally chose to go with Climate First Bank's residential solar loan option with no dealer fees. She didn't have to put any money down, was able to finance 100% of her total solar project. She was able to lock in a fixed rate for 30 years with a fixed payment of $227.86 using auto pay. She was able to roll in the loan origination fee to be amortized over the 30-year term. So on this scenario, there is the 11 kilowatt system that Sam had mentioned. That's the typical size for a home, which the loan amount was $31,460. So that auto pay, the minimum payment is $227.86 in that situation. And for this loan size, the loan origination fee with Climate First Bank would be $938, which can be rolled into the loan. And that payment is including that loan origination fee as well. She can claim the federal tax credit and actually keep it. She doesn't have to apply to the loan. Her payment's going to stay at $227.86. But if she wanted to apply it to the loan, she can go ahead and do that and recalculate the payment. Let's say that something came up with her daily life where she needed to lower that payment and she wanted to apply the tax credit, she can absolutely do so. And she can continue to do that where she can adjust her monthly payments every month. If Sally is comfortable with her monthly payments and she wanted to make additional payments towards the loan, she can also do so and be able to pay it off faster and pay less interest over time since it's simple interest. She can also pay off her loan at any time with no prepayment penalties. So this is Sally's decision to go with Climate First Bank using that option.
Okay, great. I think that is mostly it for our speakers' plan slides before we get into questions. Thank you guys so much. I just learned a lot myself. Yeah, and just before we get into our questions, we're also just going to touch again on the number one reason to go solar, which is how much electricity costs truly are going up. So Doug and Shannon are just going to talk about that for a few minutes, and then we'll dive into the questions.
Cool. So in California, the average is about $226 a month for electricity. California tends to be about 29% higher than the national average electric bill. And so something to consider, like we mentioned earlier, is knowing what your costs are for your electric bill are an important kind of really base foundational piece to understand what your savings are in the future. I don't live in California. I live in Connecticut. Our bills are also sadly high here in Connecticut. But another important thing to look at when you're considering lifetime savings are what assumptions is your installer using for the future cost of electricity. Here in Connecticut, I've had my rates go up as much as 30% in a short period of time, and then they've come down a bit here and there. So I think it's important to use a very modest estimate over the life of your loan and the life of your system itself. You know, we generally recommend somewhere in the 3% range is a good average, just so you can see what those savings would look like. You know, some folks will tell you that it's going to be a lot more, but I think 3% is a pretty fair place to start as you're looking into the future.
Yeah, I think Doug made some really great points here, especially considering, you know, how your installer factors your electricity use with bids and different project quotes. I do live in California. This is an example that is related to my life. And I think something just to touch on that is related to like anyone at this event is really the fact that at the end of the day, we don't have control over what the cost of electricity will be in the future. And so specifically in California, we've had a lot of changes over the past few years, as we highlighted in this slide. And that's just related to anyone. I think the cost of electricity is something that is on the minds of many people that are interested in going solar.
Okay, great. If that is it for electricity costs, we can start to get into our questions. And we have a few top 3 questions that get asked all the time that are some of the most common homeowner questions. And the first one is, what happens if you want to sell your home before you have your solar loan paid off? And I will turn that one over to Doug.
So specific to Sungage loan, our process is pretty straightforward. The number one thing I can advocate for consumers to go ahead and do is start the process early. Where we find that loan transfers and principal transfers become a little bit chaotic is when we get brought into that transfer process very late. So it's important, one, to know, is the principal of your loan transferable to the new homeowner? And starting that process early is also very important. I think it's important to note that earlier we mentioned the added home value that you get with solar. I personally sold a home in Massachusetts a few years ago, and definitely saw that premium when I sold our home. And you can use the proceeds of that to either pay your loan off and just include that into the purchase price of the home, or you can transfer it. I think the important thing to think about when you're getting into a purchase like this is really understanding what those options are. So when you're trying to sell the home, you're not just stuck and, the only option available to you is to pay it off, because that may not be an option for you at the time.
Okay, got it. And then we will piggyback off that and we'll give this one to Dima, which is, can I still qualify for a solar loan if I have existing mortgage and debt?
Thank you so much, Alex. And to answer that question, it's going to depend on the loan provider's requirements. So knowing what their requirements are, having a mortgage or other debts shouldn't prevent you from qualifying for a solar loan. Most lenders look at your debt to income ratio. So the debt to income ratio is calculated, commonly used by the lender, where they compare your total debts by your total income that you have every month. So when you're looking at that range, it's usually between 40 and 50%. So lenders calculate the debt to income to ensure you have enough income to pay your solar loan and other monthly debts that you have, the obligations. So you can actually calculate your debt to income ratio by taking your monthly payments of your total debts and then dividing it by your monthly income. And once you do that and you're within that range for that specific lender that you're looking for, you shouldn't have any problems with that. And if you ask the question ahead of time of what the requirements are, you can know what their debt to income ratio is that they're looking for.
Okay, great. And then one of the other most common questions that we get is, who actually services the solar loan once you take it out? And Shannon will answer that one for us.
Yeah, I think as we've all said, it really depends on the financier that you're choosing, right? But specifically with Atmos, we have our in-house underwriting team, so we review all of the applications in-house. And then we do loan servicing on our side, and all payments can be handled through our payment portal. That being said, we do have bank partners that assist with servicing as well. So it's definitely worth asking your installer and checking in with the financier that you're considering before moving forward.
Okay, great. Thanks, Shannon. And so we have a bunch of questions in the chat that we can go through and answer. We won't necessarily get to all of them, but again, we'll send this out to you guys afterwards. And yeah, there was one I can answer really easily, which is, if you pay in cash, do you have a monthly payment anymore? And the answer is no. And that is why paying in cash is the best possible option, because you eliminate your electric bill right away. And then you also do not have a monthly loan payment. And yeah, so we can sort of have our speakers and then Jessica and Sam answer. You guys can feel free to jump in. I know another common one is about the difference, what are the benefits of using a home equity loan or a HELOC to pay for your solar instead of using a solar specific loan. Doug, I don't, maybe you'd be interested in taking that one?
Yeah, I can definitely jump in. So I really think it depends on understanding what your future goals are. So the first step with a home equity loan or a home equity line of credit is making sure you have enough equity in your home to qualify for that. And so it's a good starting point there as well. Also, generally, the interest on those loans is tax deductible. So there's an advantage there as well with those purchases. Some of the negatives would generally be that the rates can be variable. So if interest rates are rising and falling, your monthly payment and cost to have that loan can change. They also generally come with a shorter term, so your payments can be higher in some instances as well. With a solar specific loan, you're not tying up the equity in your home to be able to do that project, so you have that additional flexibility in the future if you'd like to go ahead and get a home equity line. And one of the other advantages is because a solar loan is very much specific to a solar project, the subsidies that you get with the solar project are really factored into the structure of how we calculate payments. And generally the monthly payment is a bit lower, which over time is helpful, and the interest rates are fixed as well, so you know exactly what that payment's going to be every month for the full term.
And if I may, Alex, I'd like to piggyback on that. So with the home equity loan, it's actually a fixed loan that can be amortized over a term, whereas the home equity line of credit, the HELOC, it's a line of credit similar to a credit card. So as you use it, you can pay down that balance, where it's a little bit different in that aspect. Both, like Doug mentioned, requires equity in your home to be an aspect, and they both are typically between a 5 to 10 year term or 15 years for a HELOC. Whereas with the home equity loan, you can actually, it'll amortize out for a specific amount. You'll have that fixed rate, and you not necessarily have to have a variable rate. The line of credit has that variable rate option on there.
Okay, great. And then another question that we have here is, are there prepayment penalties for solar loans? And what is the standard term typically for a solar loan?
I can take that one. So most solar loans they don't have prepayment penalties, but it's going to depend on the specific financing company as well. So that's definitely a question that you want to ask when you're applying for that loan, to see if they have those prepayment penalties. At Climate First Bank, we don't have a prepayment penalty associated with our solar loan, and the customer can pay it off at any time, and it is simple interest. So it's interest up until that point when they pay it off that they'll be charged. So it's the less amount that they would have to pay.
I would jump off and say that Atmos has a similar offering. So there's no prepayment penalties. You can pay off the loan early. And like you said, it's a similar format. So the customer almost is incentivized to make payments earlier on. We also have unlimited reamortizations if the customer wants to lower the monthly payment or shorten the term of the loan as well.
And on Sungage side, ours is very similar to what Shannon just described. Our loan is also simple interest, easy to pay off without any penalties. And then you can do the reamortization as well. We tend to find that ream happens most typically when a homeowner gets their tax credit divided over 2 years. So having that flexibility inside of the loan structure is important, and something you'll want to ask as you're interviewing and looking at finance providers.
Okay, great. And then we have a question that says, what types of rates are these loan examples based on? Are they realistic for the market today? And I think you guys all gave examples that are existing rates that you have, correct?
Yes. So for Climate First Bank, the 30-year term with auto debit, the interest rate is 7.56%, and that has no dealer fees, just the origination fee.
Okay, great. And then we have here, if a roof replacement is done at the same time as a solar panel install, do both qualify for the federal tax credit? And typically a roof replacement does not qualify for the federal tax credit. However, a lot of companies will allow you to roll both costs into one loan, which I think Doug Wright Sungage does that. And Dima does climate.
Yeah.
You guys do that also? Okay. Okay, great. And then we have, are there any rebates or savings for agricultural operations? Which I'm not totally sure what that question means, if any of you guys do. Otherwise, we can look into that and get back to you guys.
Yeah, I can give a small little tidbit there. So generally agricultural programs are, a lot of those subsidies are on the state side. And for our loan specifically, we do a residential loan. So once you get into an agricultural scenario, for us, it's considered more of a commercial loan. And we wouldn't take those subsidies inside. That being said, there certainly are some lenders that do, and it's good to explore those options if you have those commercial type subsidies available to you in your market.
So Climate First Bank does have a commercial loan as well, which is a 25-year product for commercial, and the rate is 8.99. So if you're looking to do an agricultural loan in that aspect, we can assist with that as well.
I'll tag in here and say that we're working on a commercial offering. We don't currently have one yet, but it's great to hear. I think there's definitely a gap in the market for small to medium size businesses to get a solar loan. So that's something that we're definitely thinking about over at Atmos. But yeah, we're currently really pushing forward the Resi program.
Okay, great. And another question we have is, what are possible electrical panel upgrades that might be needed with solar? So I don't know if you guys, is that something you guys can speak to potentially, or maybe Jessica or Sam, common things that people add on to their project?
Sure. Yeah. I mean, I think when it comes to like electrical panel upgrades, it depends on the size of your system for one. So your installer will definitely make that recommendation for you if you need it for solar, but also if you're looking at adding on maybe like an EV charger, or, possibly doing heat pumps, HVAC upgrades. Either one of those, may also give you a reason to just upgrade that electrical panel while you're doing solar in combination with those, to make sure there's no issues, running that equipment. And most installers can do that work for you as well too. So they can usually bundle that up with your solar install.
All right. Another one we have here is, in general, can solar specific loans be refinanced? They're referring to that interest rates are pretty high right now, which makes payments close to what they're spending in electricity. And so if rates drop, can these loans be refinanced?
So I'll go ahead and share. So most loans, if they don't have a prepayment penalty, similar to our car or your mortgage, you can definitely refinance those loans. You'll have to find a provider that's willing to refinance it. At Climate First Bank, we currently don't have a refinance option, but if you got a lower rate option to refinance, you could definitely do that and pay off the loan. So you pay less interest and you can get a lower payment when you refinance the loan as well.
Okay, got it. And then we have a question about fees that the finance companies charge, and how that factors into loans. Maybe Dima or Shannon, you can take that one.
Definitely. So there's a fee called dealer fees out there that it's not necessarily upfront, where you can get a lower interest rate for the loan. So asking that question of the difference between the cash price or the finance price to see if it has that fee. If they are not saying that they don't have any dealer fee options, there are loan origination fees associated with loans on consumer. For example, you have the UCC filing. If they put that on there, there's fees associated with that. They're hard costs. So like the loan origination fees at Climate First Bank, based on the scenario for Sally, it was $968. Don't quote me on that. I don't have the slide in front of me, but it was a small amount that on there compared to some of the other fees that can be out there. So asking that question with the financing provider that you're working with to know what that is, educating yourself is key on that aspect.
Yeah. And I think Atmos, we're pretty transparent. We have a 3% financing fee, kind of similar to like mortgage. It's the same for every rate and term. It's upfront to the customer. You're aware of it. It's in your loan agreement. We kind of consider it like the cost of doing the job. So we won't have varying kind of higher dealer fees that drive up the total loan amount and the total project cost. So at Atmos, you can see that information on our website. But yeah, like Dima said, just making sure that you talk through the different finance options and making sure that it's aligning with, you know, what you're trying to accomplish, especially with your long-term goals.
Definitely. Okay, and then we have a question about insurance, which says, what about insurance on an installed system? I don't know specifically about that if you guys do, if anyone wants to jump in, but I do know in certain states that when you get solar panels installed, it can increase your homeowner's insurance. Like, for example, Florida is a state where your homeowner's insurance can go up a lot. So that's definitely something you want to check on. Unless there's anything else insurance-wise that you guys think this question might mean.
So I know with depending on the system size, if it goes into what's called a tier 2 system, that tend to be larger systems, there's a higher policy that's required as well for you to get interconnection done too. So it's one of the requirements on there. So definitely looking into your insurance companies to figure out which ones can accommodate that. Some insurance companies are dropping clients if they're going solar too. So it's something to keep in mind. For Florida specifically, that's where I'm at. We have an organization called Placia, where they actually have solar friendly insurance companies. So look into your state specific for those types of organizations that are solar friendly, and they'll have that information for you to be able to see which insurance companies will be able to assist you.
Okay, great. And someone said which loan didn't require a hard credit inquiry? I think maybe that was Sungage, or do all three of you want to reiterate what yours is?
Yeah, so for Sungage, ours is a soft credit pool from start to finish. So, you know, you'll never see a hard inquiry on your credit report. The loan itself will show up on your credit report once it's funded, but the inquiry itself will not impact your credit.
With Atmos, we have a initial soft pull. So it's an opportunity for customers to get pre-qualified and see what they're able to get sort of loan-wise in terms of amount. And then our installers enter in essentially a project quote. And once that's submitted, the customer can complete the rest of the application, which is a hard pull. But we like to have that sort of pre-qualification step for customers that are just trying to see where they could qualify before moving forward with the rest of the application and doing the hard pull.
Yeah, similar to Atmos Climate First Bank, we do a soft inquiry during the pre-qualification process to see if you would qualify for the loan or not. It'll give you that feedback on, you know, what the minimum credit score, the debt to income ratios, things to look at if you may not qualify. And once you do, if let's say you pre-qualify and you want to move forward with an application, you process that application and you'll acknowledge that it will be a hard credit inquiry at that point when you submit that application.
Okay, great. And then someone asked, what happens if the solar company goes out of business? I'm not sure if that's something anybody feels like they have a good answer for. But I'm sure some people have been hearing about that lately in the news, especially as interest rates go up.
So I can share with our partners that we have, you know, we would do is we work with our customers because we service in-house to all of our customers. So if they're in the midst of middle of going through a project and their installer goes out of business and it's something that wasn't foreseen coming, we can work with the client to try to find them another installer to help complete that project. We've had installers in the past that's come up to us when you hear of a big company going out of business saying, we're happy to help any customers that are impacted by that, and they can fulfill the contract price that was originally negotiated to make that completion be done for them to get that project completed. There's also a program called Solar Insure, which most installers are offering to their customers, and it's something that I would recommend as well, where it's kind of like, if you think of your Apple phone, you have Apple Insurance, it's insurance for your solar panel. So if the company went out of business, they can then help complete that through another installer within their program.
And I
Okay.
think just to add one other piece, I think another important aspect to it is I think a lot of times installers don't completely talk a lot about the equipment itself that you're getting. So it's important to look into the warranties and what's covered by the manufacturer. There's some manufacturers that cover labor and materials, some it's just materials. And so it's important to also look into the equipment you're getting and doing some research on, what tends to be reliable. So if you are stuck in a place where the installer that you worked with is out of business, that you have a manufacturer warranty that you can pull from to help you in that situation.
Definitely. And to piggyback off that, someone asked about what kind of maintenance costs you should factor in over the course of 2 decades of ownership for solar panels. And I think the great answer is usually there shouldn't be too many issues with your solar panels. They're usually very reliable equipment. But if anyone has anything specific they would want to kind of point out about that.
I think someone else, excuse me, someone else asked who services the equipment, which I feel like can tie into your question, Alex. And just like Doug said, understanding the warranties of the actual solar equipment that's going on your property, be it on your roof or on a ground mount, whatever, understanding those warranties, but also in those early conversations with your installer, just making sure that you understand their service warranty commitment. So if they have like a 10-year warranty, 25-year, they're usually going to tell you what they're able to service in the agreement for the project. So just kind of getting a sense of what that looks like from each installer and asking that kind of question with them as well is really important.
I agree 100% with Shannon, and it's the workmanship warranty too, where you want to make sure that you're able to offset if something happened with the work that they provided. They have that warranty in there, and it's in your contract. So as you're getting those proposals, look at that. And Shannon mentioned in her slide to get a couple proposals, compare them because they're all going to be different. And as you're doing that, you can see what they're offering during that maintenance or workmanship warranties that they have.
Okay, great. And someone else asked a question about if anyone's good at math, if you have an 8% rate on your loan, but electricity is going up at a 3% rate, does that cancel it out? Like, does it negate the benefits of your savings?
I can definitely take that one. So with the interest rate, because it's a fixed rate, the monthly payment is not escalating at 8% a year. It's just there's an 8% interest rate that is factored into the amortization schedule for the loan. So really the way to look at it is, assuming that your loan is a fixed monthly payment and your cost of electricity is rising over time, it's really being comfortable with that initial monthly payment that's important. I've been in solar for a long time, so I've seen interest rates all over the place in the last 16 years. And interest rate to some degree is a little bit irrelevant when you're thinking about, should I do this or shouldn't I do that? It's really more about what's the monthly cost and the lifetime cost that is associated with that interest rate. So, if the payment's fixed and your utility is rising, then every year that your savings are going to increase.
Okay, great. And someone asked, is there a calculator to get a rough estimate of monthly cost for solar? I know we have one on Energy Sage. I don't know if that's something that you guys all offer, or if you have a suggestion for how people can most easily kind of estimate that for themselves.
I think starting with the Energy Sage tools is a great idea. You guys are known for your plethora of resources, so we should definitely have people tap into those. And then with Atmos, if a customer is working with one of our installer partners, we do have kind of a little calculator mechanism in the beginning of the pre-qualification, which is again a soft pull. So that could be somewhere to start. But I think Energy Sage would be the first place to go for sure.
Likewise, I agree with Shannon. I actually refer customers to Energy Sage to do their due diligence as well. But we also have a payment calculator that's the installers that'll have access to it to calculate what those payments are based on the project size. And then they can send an estimate to you as the homeowner to get that a summary essentially of what that snapshot will look like.
And one thing to mention on all those payment calculators is every home is very unique. So there's a bunch of different things that can factor into getting your system price completely quoted. There's definitely some additional cost in solar. Things like structural upgrades, electrical improvements. Do you need a roof? Are you adding a battery? So working with your installer to really get that customization of what you need to do the project up front is a really important step. And you know, with most of the installers that I've worked with over the years, they're generally able to provide those things to you at the point of sale as you're having those questions, so you can make a really informed decision early in the process before you have before you feel really committed to a project with additional costs that are kind of lurking in the background.
Yes. All right. We have a few more minutes for some questions. These are great questions. We have so many. I wish we could get to all of them. Someone asked, for solar loans, are solar loans secured loans or unsecured loans?
So I can go ahead and share with Climate First Bank, we have, it's essentially an unsecured loan, but we do secure the panels themselves located at the property with the UCC filing. So it's just for the security of the panels. If something was to happen where you defaulted, we can come take the panels back. Honestly, we never would do that, but you never know if that could happen. But it is a UCC filing on the state and local level.
Yeah, Atmos is the same. So we file a UCC 1 lien on the solar equipment itself, not the home. It can show up in like a property search, but it's on the equipment itself. So exact same model.
And just to say the same thing over, it's the same. So yeah, we're just securing against the equipment on the roof.
Sorry. People had a question about using credit unions and if it's ever a good idea to finance through credit unions.
I can hop in. So at most we don't only do solar projects. We have other product offerings. But our main goal is to accelerate the rate at which capital is deployed in environmental projects. Solar being one of them. So we do partner with a lot of credit unions and different banks to secure the financing of these projects. So credit unions are kind of our friend in this space. That being said, credit unions definitely have their own solar programs as well. There's a lot of, I would say, research to be done by each homeowner to understand the specifications of the different programs. They definitely vary in terms of, how homeowner friendly they may or may not be. But yeah, we have relationships with credit unions at Atmos in terms of gaining our funding and having capacity for different projects. But again, I think it really depends on your long-term goals and the specific project that you're trying to complete.
And if I may piggyback on that, so Climate First Bank is a bank that's a financial institution similar to a credit union, and credit unions have different regulations than banks do. One of the things with credit unions, the longest term that they can offer you for your solar loan is 20 years, because that's the regulation that they have in place. So if your long-term goal is to have a lower payment up front, maybe having a longer loan term of 30 years would be more beneficial than having that 20-year term. So it goes back to doing that interview, whether it's a bank or a financing company or a credit union, you want to interview them to see what's best for you.
Definitely. And someone asked, if a state doesn't have net metering, is it better to size a system to offset the typical lowest monthly electricity usage? If that's something people feel comfortable answering. If not, that's one we can also circle back to.
Yeah, I can certainly jump on that one. So in markets where you don't have net metering, there's a couple different ways you can approach those projects. The most common we're seeing is to add a battery to the system. Now that does add a cost to the system, but you are also able to store the energy on site. And then in the evening, when you're not producing electricity, you can go ahead and take advantage of that electricity. It also adds a lot of resiliency to your home. So power outages are very common and hard to predict. And having a battery is a great peace of mind to add on to a solar system. Another way you can approach it is, I have a home energy monitoring system here, so I can see very specifically. I should preface this with I'm a bit of an energy nerd, having been in solar for a long time, where I can actually see to my individual appliance what my house is using in real time. So it's also not a terrible idea if you're someone that's very motivated by your usage curve throughout a day, to design a system that's really offsetting just that peak usage. And then there's some lifestyle changes you can make to make that a more advantageous investment for you. Things like using your clothing dryer during the day and running your dishwasher when you leave for work. There's anything you can do to use electricity when you're producing it in those markets is a big part of taking advantage of the value proposition that comes with a solar system.
Definitely. Well, I think we're mostly out of time. I think we got through a great amount of the questions, and those were all super valuable answers from our speakers. Thank you so much to Shannon, Doug, and Dima, and Jessica and Sam. We have everyone's information up on the screen if you'd like to reach out to them. And you can also use Jessica and Sam's QR codes if you want to connect with them. And as a reminder, we will send out a recording of the webinar, so you can refer back to it. And we also have plenty of more information about financing on our website if you check out our finance landing page. And I saw a ton of questions about the federal tax credit, which is great that people are so interested in learning more about that because it is very complicated. We also have a webinar that we recorded specifically on that, which you can find in our financing guide. So you guys can reference that. And we have a bunch of articles about that on our website, so you can find some answers. But a credit is different than a deduction and a refund. It is a credit. Just we'll end on this because so many people ask. It's a dollar for dollar reduction of your tax bill, which is different than a refund. You don't get a check back in the mail. You don't get cash. It just reduces your tax bill that you owe, which is also different than a deduction, which deducts from your total income that you have taxed. So I hope that helps a little bit. But yeah, thank you guys so much. This was great. I learned so much too, and we hope to see you at our next one.
Thanks, guys.
Thank you so
Thank
much.
you.
Thank you.
Thanks for
Thank you,
joining.
everyone.
Have a great day.
Thank you, everyone.